Greetings to all our IMAPS clients and investors. Let me walk you through the latest changes made last quarter. In 2024, equity markets continue delivering positive returns, interest rates have declined, and the US dollar has weakened against major currencies over the last few months. Inflation has continued to ease, which together with softer economic data has allowed the US Federal Reserve to begin loosening monetary policy. The labor market, consumption figures, and credit metrics show a slowdown in economic activity, but still provide enough support to make soft landing the base scenario. The third quarter witnessed an increase in market volatility, seeing the S&P 500 volatility index jump into a higher volatility range above its year-to-date average. Sector rotation has driven market returns. Out of the 11 sectors in the S&P 500, the top two performers were real estate and utilities, while information technology and energy were the two worst performers. The results of the US presidential race remain in question without a clear potential winner, further clouded by two unsuccessful assassination attempts against President Trump. Geopolitical tensions around the world remain high. Israel is increasing frequency of attacks directed at strategic Hezbollah targets, while there are no signs of ceasefire in the horizon between Russia and Ukraine. The key drivers to keep an eye over the last few months of the year are going to be the arrival of new economic data, which will shape the trajectory of the Fed's monetary policy, more clarity surrounding the economic agenda of the two US presidential candidates, China's effort to reignite its economy, as well as Europe's darkening economic outlook. Our recessionary economic indicator predicts that there is less than 50% chance of recession over the next 6 months, a reason why we remain neutrally positioned in our strategic and tactical asset allocation, positioning that has allowed the portfolios to perform well in line with expectations without taking excessive risk. Portfolio duration hovers in the 5 to 6 years range in line with its benchmark, in order to benefit from an environment of declining interest rates. Bond maturities are properly spread out without heavy concentration on specific tenors, balancing the portfolio against non-parallel moves in the yield curve. We maintain our tactical tilt towards investment grade in order to successfully navigate air pockets during the rest of the year. Active managers have performed according to plan, delivering above benchmark returns. Changes were made to the equity allocations in an attempt to successfully navigate higher volatility. In particular, we have established a barbell approach, rotating the S&P 500 equal weight position into information technology, utilities, and healthcare in order to make the equity position more responsive to positive and negative market moves. Emerging markets exposure has been adjusted by reducing allocations to China, India, and Taiwan, in an effort to reduce country concentration to China's negative outlook, as well as reducing assets with the stretched valuations, as in the case of India and Taiwan. Finally, we are introducing a new active manager as part of our European holdings, complementing passive managers with active management to increase alpha generation and achieve a higher adjusted return. We hope you are well, and as always, please reach out to your financial advisor or investment professional with any question you may have. Thank you.
Insignia Financial Group LLC comprises a number of operating businesses engaged in the offering of brokerage and advisory products and services in various jurisdictions, principally in Latin America. Brokerage products and services are offered through Insignia International Financial Services LLC, headquartered in Puerto Rico, and through Insignia Securities LLC, headquartered in Miami. Both are members of the Financial Industry Regulatory Authority, FINRA, and Securities Investors Protection Corporation, SIPC. Investment advisory products and services are offered through Insignia Advisory Services LLC, an investment advisor registered with the Securities and Exchange Commission. In Uruguay, advisory services are offered through Insignia International Asesores de Inversión Uruguay, SA, Insignio Asesores de Inversión Latam, SRL, and Insignio Asesores de Inversión de Uruguay, SRL, in Argentina, and through Insignio Argentina, SAU, and in Chile through Insignio Asesorías Financieras, SPA. Collectively, these 8 operating businesses make up the Insignio Financial Group. To learn more about the broker-dealers, including their conflicts of interest and compensation practices, please go to https://insignio.com/disclosures/ or via www.finra.org. To learn about Insignio Advisory Services and any conflicts related to its advisory services, please see its Form ADV and brochure, which can be found at Investment Public Advisor Public Disclosures website, https://advisorinfo.sec.gov/.